Joining us now, Jeff deGraaf. Jeff from Renaissance Capital, good to see you. Thanks so much for joining us. Let's touch on some of these charts and your views that you've got for us. Firstly, just the seasonality point and whether that's going to be a challenge in the months ahead.
Yeah, look at that dot that you see there. That point is where we are today, and clearly we're below the median line. And this is about 3-month forward returns, right? So where you are on that spectrum says what you should expect for the next 3 months. There's still positive returns. There's no doubt about that. But as you get to the end of earnings, basically the end of July, that's the point at which the next 3 months tend to be the weakest. That takes you through August, September, and October. And then that sets up historically for a pretty good fourth quarter rally. But I do think that you'll want to take the foot off the accelerator here in the next month or so to look for some type of pause, some type of consolidation. And frankly, we're seeing it in breakouts not following through and some of the rotation that we've seen in the market over the last 4 or 5 weeks.
One sector that you like the look of, aerospace and defense.
Yeah, we do this on an equal weighted basis, so it's not really Boeing heavy or Northrop Grumman heavy. Those two stocks still look okay to us. But the improvement there, I think, is notable because there has been some concern about cyclicality. There has been some concern about what's happening. Are people going back to tech? And, is that the end of the cycle in terms of the economic cycle? One area that's been lagging historically over the last 6 to 12 months here has been aerospace and defense, but that's starting to improve, and you can see it on a relative basis. The absolute chart's been fine. Really, everything in today's markets is a relative call, and that's starting to improve on a relative basis, which is good news for us, and certainly suggests that this might be early stages to start to overweight that group in terms of looking for a continued recovery there.
You just briefly mentioned where we are in the economic cycle. The whole cyclical trade has really stalled here, especially if you look at it relative to defensive stocks, which have held up. What does that tell you?
Well, for now, Sarah, it's a consolidation. It doesn't look like a reversal to us. And I think the good news here is that, yields have remained range bound between this basically 177 and 140 on the downside. What we get concerned about is when defensive names outperform, and you can even see the price action today where utilities were the worst of the S&P. We're not seeing the cyclical trade come off yet at the expense of defensives. And that's the good news. It's really sort of a knife fight, if you will, between technology and industrials and a little bit of materials here and there in the reflation trade and non-reflation. But what we're really most impressed by is not seeing this migration from, say, discretionary names into staples or from financials into utilities or tech into healthcare. That's where we start to worry about the cycle. And so far, what we're seeing from cyclicals versus defensive still says that this is probably a pause. I'm sure a lot of it was induced by the Fed's rhetoric here recently, but it still looks to us to be more of a pause in this trend than it is a reversal of that trend. And I think that's still good news for the market overall.
Jeff, just quickly wanted to ask your view on the dollar, because it's been bumping around of late. A strong day today. What's your take there?
Well, it hasn't broken out yet, so we still see this in a potential trend transition, but we'd still call it a downtrend, although it's obviously weakened. It's held the most recent support. It got overbought about a week and a half ago. It held that overbought condition, pulled back a little bit, and then obviously followed through today. We'd really need to see it through about 93.5 to get more convinced that it's a potential trend change. But usually these currencies, when they change trend, they take some time, they base out, they have really a longer transition period. So we'd expect to see more of that. But I think you're probably in a zone where we've made a meaningful low in the dollar. And I do think that that's going to be important going forward. And obviously that'll have some impact on the cyclical trade here. But so far as we see it, we think it's probably still more of a consolidation than not.
Jeff deGraaf with the charts. Thank you. Good to see you.
Shepard Smith here. Thanks for watching CNBC on YouTube.